Hi, Howard Deal here with the General Agency, and today I will be going over the changes for 2022 to the Affordable Care Act as it applies to group health insurance for large group employers. I'll specifically be going over the fines and penalties, the applicable group size, the full-time equivalent, and also the affordability threshold for penalty B. Also stay tuned because I have some solutions that can help you offer benefits to your employees at an affordable rate and also avoid some underwriting details there. So a very simple solution there. So with that being said, let's get started. Okay, so the first thing we're going to cover are the penalties. There are two penalties that apply to groups of more than 50 employees. This includes full-time and full-time equivalent employees, and I'll run over what the full-time equivalent is here in just a moment. The first penalty we're going to go over is penalty A. Penalty A is penalty 4980HA, which is commonly known as penalty A. For 2022, the Part A penalty is $2,750 per employee. Now, employers with more than 50 lives, including full-time equivalent employees who do not offer at least a minimum essential coverage plan to at least 95% of the full-time employees and their dependents for any month during the tax year, and at least one full-time employee received a tax credit for purchasing coverage through the marketplace is subject to penalty A. Basically what that paragraph means is if you have a group that has more than 50 lives and you have one employee that went to the marketplace and bought insurance, then the employee that employee reports that on their subsidy, and the IRS is notified, and then the group is actually charged with penalty A. So keep in mind that's a very important thing to get this covered because penalty A is $2,750 per employee per year. So you'd multiply that times your however many employees you have above 50 or 50 and above. So that's penalty A. Now, penalty 4980HB is commonly known as penalty B. The 2022 penalty for failure to offer a minimum value plan or an MVP plan is $4,120 per employee per year. Minimum value plans are considered to be an equivalent of a bronze plan and must meet the affordability threshold, and we'll cover that in the next couple slides. Remember, this applies to groups with more than 50 employees and full-time equivalent employees, which we'll also touch on here in just a moment. So the penalty B affordability threshold. Beginning in the calendar year of 2022, the IRS has decreased the affordability percentage index from 9.83% in 2021 to 9.61% in 2022. This means that the cost of the employee's health insurance, not including the dependents, cannot exceed 9.61% of his or her monthly salary. Penalties are assessed on a monthly basis for every full-time employee that does not receive an offer of coverage, or in the case of penalty B, it's unaffordable and the employee received a premium tax credit for that month. So the penalty for penalty A is $229.17 per month per employee per month, and penalty B is $343.33 per employee per month. So if you haven't started offering insurance to your employees, you won't be hit for the whole year if you started like mid-year. If you started on June 1st, you would actually only be assessed for the 5 months that you didn't offer coverage for your employees. So that's the assessment of the penalties. Okay, on the group size, some groups have they're borderline 50 employees. If you already have 200 employees, you already know you're subject to the Affordable Care Act. But if your group teeters on, I didn't have 50 lives this month and I did the next month and so on, to determine if your group is subject to the Affordable Care Act, you'll need to add the total number of full-time employees and the full-time equivalent employees for each calendar month of the prior calendar year and divide it by 12. So what this is saying is, say for example, last year you had January, you had 45 employees, February 52, March 65, April 66, May 44, June 38, July 59, August 44, September 51, October 38, November 55, and December 55. That would give you a total of 612 employees divided by 12, and it gives you 51.25 employees, which means you are subject to the Affordable Care Act. So there are calculations for calculating the full-time equivalent employees, and we'll go over that in another video. That is a more complicated calculation, but that does base itself off the previous year. So as far as solutions, the solution for penalty A, the best way to satisfy penalty A is to offer a MEC plan, or a minimum essential coverage plan. Minimum essential coverage plans are limited, and the premiums start at about $49 per employee per month, and employees can contribute to the cost. So it's pretty cheap to get out of penalty A. So if you're interested in a MEC plan, be sure to give us a call. They're easy to install, and keep in mind the employer does not have to pay all the cost. Okay, solutions for penalty B. To satisfy penalty B, an employer must offer a minimum value plan, and as I mentioned earlier, that's an equivalent to a major medical bronze plan. An employer can offer a minimum value plan through individual coverage, individual health reimbursement arrangement, or an ICRA. And ICRA allows employees to purchase individual coverage and have the premiums reimbursed by the employer, which will satisfy penalty B. The individual health reimbursement arrangements are complicated, so make sure you ask a professional to set one up for you. If you're interested in individual health reimbursement arrangement, you can call us at the general agency here, and our network of brokers can help you. Unfortunately, there's very few simple solutions to avoiding these penalties. Obviously, the best way to avoid them, and the easiest way, is to offer a major medical plan to all of your employees. But in some cases, it may not be affordable. The business may not be able to afford that. Also, there may be medical conditions in the group, which makes it, the insurance companies may increase the premiums to offset the medical conditions that are in the group, which makes it unaffordable. Or the insurance company may say that since it's over 50 and it's not guarantee issue, that they won't write it at all. So we have a limited day plan here at the general agency, and that plan will satisfy the minimum essential coverage, and they also couple that with a bronze plan that will satisfy Part A and Part B. The nice part about that is the limited day plan with the bronze plan will satisfy both penalties, and it's also guarantee issue. There's no medical questions, no underwriting. So if you're interested in seeing one of those, give us a call here at the general agency, 972-466-2915. And we have a network of brokers around the country that can go out and help you take a look at the rates and install it if need be. So anyway, remember, if you like this video, to hit the like and subscribe button, and I hope you have a great day.